Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today we have Fabi. She's so gracious to join us on the channel today. So thank you for coming on. I appreciate it. I know it was kind of short notice.
The pleasure is mine.
Before we kind of go in, can we get a little bit of your background, kind of how you got into mining stocks and stuff like that, kind of maybe what you went to school for, and then kind of how you transitioned into becoming a mining stock investor?
Sure, no problem. So I went to the School of Hard Knocks of Life, University of Life. I actually started out in business in my early 20s doing language education online. And I did that, for myself with my own company for quite some times. And I got to the point where I had my own intellectual property, so my own courses and books and stuff like that. And then I took some inspiration from some smart business guys and maybe even the mining sector. And I licensed the project out to a different company and lived off royalties for a few years. And with that, I had to get into investing more and more just out of boredom, right? Because what do you do when you're this young and like you don't need to work for money per se? Obviously, things change, especially with COVID, and I wish I had done things differently. But I started investing. My first investment was actually silver at the very top. So 2010, 2011, that tiny little spike, everybody's really excited. I was living on the internet because of my business at the time. And so I watched all of those buy silver, crash JP Morgan videos. And I was obviously very impressed because I had no idea of what that meant. And I didn't know where to look up numbers for silver. I just went and bought a bunch of silver coins. And then made like no money for the next 10 years in silver. But what I learned is that there's actually a different way to play silver and gold, which is going to the miners. And it's very risky and it's very dangerous, but it's leverage in the sense that you can lose a lot more, but you can also make a lot more. And obviously, for an entrepreneur, if somebody says you can make a lot more, you're instantly drawn to that, right? It's kind of the all or nothing deal. And so I started investing in mining companies, gold, mainly gold, copper, and also uranium. And then the rest is history because I started making some YouTube videos and telling people what I liked. I was kind of lucky with my timing when I started to make YouTube videos because it was back when weird, stupid deals could be found. So you had Ivanhoe, the copper company. I think they had, if I'm not mistaken, 80 cents cash per share, and their share price was at $1. And at one point it was 1-to-1, right? So you have one of the largest copper deposits in the world, undeveloped, and some of the best management teams in the world, and they're trading at a 1-to-1 cash. And, like I made videos about that, and it was so easy looking back, right? But the things that I was finding out, I was talking about, and then people took notice and they started to care about what I thought, right? And here I am. Now I consult with some companies who are usually on the smaller side, but have really good, interesting stories, and they want to be found online. And that's what I help them to do. I help them to get their story out, get their message out so that more people can, I guess, have the opportunity to play in the more speculative side of the market as well, because that's what I like.
So when you look at these speculative companies or these really small nano caps or small market cap companies, how are you evaluating them? Are you like calling them up and talking to them? Are you looking at their balance sheets? By then, they probably don't really have any revenue or anything. How are you going about evaluating?
I don't look at balance sheets because it's pointless at that point. Here's what I like to do. I find that calling or meeting with management team is only good if you want to discount a company. If you have a feeling that a company is not good and you're looking for a reason to drop them, then maybe meeting them and talking to them might help. The issue I find with talking to management is if they're good salespeople, they might fool you, right? And they'll say things that will get your hopes up, and things will never really crystallize because, you know, some people have really strong sales backgrounds and they end up being CEOs of those companies. And so it's not your fault for not knowing, but I don't find that that's usually very helpful. So what I try to do is first, I try to pick out a commodity that I like, something that is not too sexy, something that's not talked about right now, or something that I believe with uranium, for instance, that it has a lot more to run. And so once I pick out the commodity, then I try to look for companies that have either compliant pounds in the ground or non-compliant pounds in the ground. And I think that's kind of the corner of the market that's often forgotten. So there are a lot of companies that are looking at brownfield exploration, former mines, and things of that nature. They know that there is a resource in the ground, but for some reason, you know, it's an old resource, or you know, there's one company that I'm actually a marketing consultant for, and when they found the resource, they didn't really drill it to find out how much they had or anything like that. The grade was so good that they just started mining it, right? And so they know it's there, they just don't know how much there is, and you know, the exact grade, and you have to make whatever information you have NI 43-101 compliant, right? So you have to update it in a way that the regulators will be happy with it, and you'll get a little tick of approval. And I like those plays because at the end of the day, there is value in those companies in the sense that they have a resource. Whether that resource is worth a lot or a little is something that you're only going to find out when the commodity comes back into vogue, right? So what I like to do is, because the commodity is already discounted, because it's already down and nobody cares about it or everybody hates it, it's kind of been left for dead. Then when you look at those, you know, tiny little companies, those nano caps, as I like to call them, the people holding them are usually people who are true believers, or they're founders, they're the original financiers of the company, and they are just holding it because they believe in the future of the company long term. And so usually those companies have, you know, very tight shareholding. It's only, you know, a handful of holders, but also and this is super important, the management team doesn't take a lot of money out. Because if you have a tiny little company with a tiny little market cap, and you see that the CEO is taking a massive amount of cash out to pay themselves, you know, to go off traveling the world and going to their favorite golf course, then that's a major red flag. One other thing that I see is when you go through the company's finances, is that sometimes they take a line item that could be or should be, that's debatable, one, and they split it into 2, 3, 4, 5 different categories to make it seem like it's different things. For example, marketing and communications. You could call it marketing, you could call it advertising, you could call it communications, you could call it investor relations. There are many different ways that you can name it. And you can, you know, split that up into different categories to make it seem like you're not spending that much money into any one of them, when in fact, you're spending a whackload of money on communications and marketing versus actually putting money into the ground and just generally, you know, pushing your projects forward. So that's something to actually look at too. Another thing that I don't like is when the management team is involved in way too many companies, because it's quite common in mining that somebody will be, for example, the CEO of a company, but also chairman of another company. That's quite common. And sometimes they're a director in like 5 other companies. And you find that sometimes they actually get paid for those positions, and their yearly take home is so much so it kind of begs the question, why, what value are they providing to this one particular company? And do they actually need that? Like, does it make sense that they are taking this much money versus, share price appreciation or share price destruction? And that's something that I think people need to take a look at, because it is so common to see these tiny little companies with management that's just there to fill their pockets and nothing more. But it's something you learn with time.
And when you're evaluating these smaller companies, like what are your expectations for returns? Like what are you kind of shooting after?
I like to look at companies that will give me at least a triple. And to do that, sometimes what you have to do in order to get a sense for value is just to take a look at other companies in the same commodity and see what they're doing. Sometimes when that particular commodity or sector is not really in vogue, you will have similar companies or comparable companies, and one of them just will not have the same valuation as others because it's a newer company and people haven't heard about it and people don't care about it because they're already invested. They have ran out of excuses to tell their wives that they're buying more stock, like the spouse doesn't want to hear about uranium stocks or gold stocks or whatever. So like they're already fully invested in what they find value in, and they don't have the headspace or the pocket space to get into a newer story. So sometimes newer players are actually better plays, but they don't get the glamour, and that's what I like to do. I like to get those I like to get myself involved in those companies because you just never know what could happen. But a minimum, a triple, I see some opportunities right now that could be considerably more than that.
And looking back, kind of a lot of the companies that you've picked, and I'm not trying to put you on the spot by any means
Put
or
me on the
anything like
spot.
that. How successful have you been picking these kind of smaller cap companies? Like, has it been? I mean, I'll be honest. My personal experience, it's been incredibly difficult, and I pretty much avoid the space in its entirety, especially if it's a micro cap in gold or silver. But like,
So it
what's your success?
depends. So it depends. I don't have like a number year on year that I've been able to make from what could be considered micro cap. And then there is the question of what's micro cap versus nano cap versus, middle of the road. But the reason why I bring the attention to those is that that's exactly what happened when I made my first 20 bagger, right? Because at the time it was, I don't want to say exactly the market cap because I don't remember, but I'm fairly certain it would have been less than 50 million. And that was the recipe for me to find that stock at that time. And I think it's something that's repeatable, and it can be done, I guess whenever the market's down. And I think that in some commodities, the market's down, some commodities, the market's kind of sideways, and some commodities, things are picking up quite nicely. For example, in lithium, which I know nothing about, by the way. But yeah, I don't have numbers, but because the times that I invested in those companies, it did really well. So I keep telling people about Encore Energy that I started buying at 6.5 cents, and it's now at, I don't know, the adjusted price I think is 140 or something like that. So it reached $2 and came back down. Another company that I actually don't talk about right now, but I did talk a lot about, and it fits the bill way back when, was Western Uranium. So Western Uranium, I think was I don't quote me on this, but I think it was a 3-bagger for me. It might have been 5. I don't remember. I invested in the private placement and I got warrants and all of that. So it was a good deal as well. And yeah, I was talking about it. I'm looking at the chart here. Western Uranium was talking about it, I think 2017, 2018, when it was about anywhere from 50 cents to like 140, something like that. So yeah.
What about
Um,
what about like a
yeah.
lot of the ones that didn't work out? I mean, are you making like I understand the way that I position for these small caps is I kind of spread a bunch of money amongst 10 of them or something, and then you're hoping that a couple of them just blow the blow
Yeah.
everything out of the water and get like 10, 20 extra money or something like that. But I've also have a lot that I don't make money on.
Mhm.
And is that kind of your strategy, or is that kind of what you're seeing when you pick things?
So I'm not gonna lie, most of the stuff I have not made money on was either one of two things. I bought it when the price was already picking up, and I am a horrible market timer when the thesis is already playing out and the whole market is already going up. And I try to avoid that if I can. So you know, I'd say at least 50% of the time, if I do that, I'm not committed to the value of that company as much as it would have been if it was kind of left for dead and the chart looked like absolute like like flatlined, or it's been going down quite a bit. That's what I like to buy. If it's coming back up, if it's picking up, or if it has already picked up and there's too much noise out there, people are talking about it, people are excited, that makes it a very difficult deal for me to commit to. And so I buy it and it tends to be not a long-term hold whatsoever, right? It's kind of more of an impulsive buy. So I usually end up losing money then. And the number one reason, or the number one type of company that I consistently lose money on, is exploration, like pure greenfield, never been drilled before kind of exploration. It is such a difficult game, unless there's like a resource and it's brownfield. If it's purely like, say, Athabasca Basin, new ground, like they have indication that maybe there might be some uranium in the ground here somewhere. It's some massive area, and they try to drill it out. Maybe someday I'll hit something like that, but it's very, I think it takes a different kind of person, to be completely honest, because in a pure exploration play, you have to understand that there's a relationship between raising the money and spending the money. And some companies are slow to raise and they raise at the wrong time, but they're very quick to spend the money. And as they're spending the money, you kind of have to monitor, their cash position and where that money is going. And if they're adding value at a faster rate to the share price, versus what they're spending, it's very difficult to get that right. You have to be on top of capital raises. You have to be on top of previous, and this is for all of mine, you have to be on top of previous raises with shares that are now free trading from something they raised 4 to 6 months ago. And then you have to be glued to your screen every single time that they put news out, because if people are expecting a really nice hit and they come out with the drill results and it's a bunch of nothing burgers, then guess what? That price is going to collapse and you can't get a fill quick enough. And so I've lost a lot of money trying to play pure exploration. Some people can do it. I think people that have more interest in geology in and of itself, and they know a little bit more about the area, or what is being drilled and what they're looking for, et cetera, et cetera. It's just not something I've had any success in. I cannot name like one successful like greenfield projects that I've been involved in. So maybe people should take notice that I jinx. I jinx those exploration plays.
Yeah, I'm the same way. I don't really find too much success in doing a greenfield space or some small exploration play. And that's the reason I completely avoid it with gold, silver. There's so many different companies, so many exploration. It's like, I don't even want to play in that arena too much. Is there any way that you can reduce the risk with those companies? And like some of the things that I do is I follow maybe like billionaires where they're getting, like heavily invested in a company. They have geologists on site.
Yeah.
So I kind of follow the coattails of those investors like Eric Sprott or someone like that.
Mhm.
Another way that I reduce risk if I'm going into exploration companies is a company that drilled, they hit something, but they haven't defined the size of this
Yeah.
deposit. They don't know what's down there, but they hit something.
Mhm.
Do you do this similar things like that, or?
I don't. And the reason why, and you should, I think it's a good strategy. The reason why I personally, yes, I use the sort of billionaire strategy. I like, whatever Eric Sprott's buying, although Eric Sprott is very prolific. So he invests in almost everything. So it's hard to track that. I like what Rick Rule buys. I like what Warren Irwin buys. There's a lot of stuff that is a good indicator that, hey, maybe I should take a second look at this. But usually when there's some sort of geological success and they need to, prove out the full deposit, I don't like to buy it because the stock's already going up, right? And then it comes to like, when is the right time to enter? That's when I mess it up. So it goes back to, does the chart look like it's, something that's been left for dead? I like those. And I guess that's how I mitigate not having amazing exits, because my entry price is usually really, really low. But once it's kind of getting hot, I start to second guess myself. I know that I don't have, the geo background to prove it or disprove it one way or another. So yeah, I've lost some money doing that. I have.
What about exiting these things? I mean, what's the time to exit a small little exploration company that blew up to the upside? What do you look for? Is it
When it
just
blows up
kinda...
to the upside? That's when you get out. That's not when you get in, right? That's why I have a hard time getting into those, because sometimes people get so excited about finding the next fill in the blank massive deposit that it overshoots any sort of decent valuation. And there's a lot of FOMO. I mean, I have to contend with the fact that I missed Great Bear that got bought out by Kinross for, I don't know, 1.7, 1 point something billion. I had the opportunity to buy it pretty much all the way up. I first heard of it, I think it was in 2018. And they got hit after hit after hit after hit. And every 6 months or so, I looked at the chart, I'm like, surely, like, that's it. Surely they're going to sell now. Surely they're going to come up with the resource and, it's going to stagnate. And I was wrong. And I was wrong the whole way through. So with the way that I invest, I miss out on a lot of things. A lot of things. It's gotta look cheap. I'm a woman that likes to shop in sales. It's gotta look cheap. If it doesn't look cheap, I get jittery.
Yeah, and kind of investing in these smaller ones, what is your largest returning stock? Was it Encore that you said, or?
Yeah, Encore was a 20 bagger.
Okay.
Yeah, I still hold some of it. But much less than what I used to hold. And I've started going back to the big question, okay, within uranium or within mining, within whatever, what looks cheap. And one thing I have to say about the tiny little companies as well is that when we're living in a weird situation right now, I think, where what's happening in macro, it's just absolutely insane. Any way you choose to interpret it, there are way too many things happening. And I kind of like to compare it to somebody who is learning how to surf. I had the pleasure and displeasure of trying to learn how to surf several years ago. And it is super exciting and super frustrating, because it's like one of the hardest things to do is to be able to stand up properly on your board. But something that you have to learn when you're out in the water is that you have to learn how to read the waves, right? And depending where you are in the world, you'll find that waves come in sets, right? Sets of threes and whatever. And if you are unaware that the waves come into sets, then you're going to, tire yourself out quite a bit. I find the same with the macro situation. I can't read what's happening right now. I like it when it's boring and when there isn't much to say, but it feels like there are so many one time events that could, bring the market down or up with a lot of force. And when that happens, I like the tiniest companies even more, because everybody who was, risk on is like gone. And you only have holders who are in it like hardcore. So, and then that's how I feel right now. I don't know what your view of the markets are right now. I just feel like we could have, a massive relief rally. We could have a proper, like, we're going back to all-time highs rally, basically because of inflation not coming down. We could have a massive crash. We could go sideways for a long time. Like, just pick your poison. Anything could happen. And when I look at the movement that's been happening in like the general equities, and I go and look at those tiny little companies, very little movement, super illiquid. And that's when I like to get in. I heard somebody really smart say that illiquidity is your friend when you're trying to position yourself. That's what the small investor has as an advantage, right? Not a disadvantage. So when you're small, if it's an illiquid stock and you believe in the story and you're in it for the long run, then, that's a good signal to, get position. And I see those stocks that aren't doing anything, markets up, markets down, and they're just like flat. I like that.
Yeah, they're what I do, I kind of cheat a little bit. I call it cheating, whatever, is I'll put like you've got these wide bid ask spreads. They're just massive. And you're like, all right, what should I put in here? So I put a limit order, and then I put a small amount, and I see if it fills. And if it fills, I put another limit order down below it. And if it fills, I put another limit order down below it. And then when it stops filling, I go back to the last fill point and then put a big order in and fill in that order. So it's like I'm
nice.
If you were to look at kind of like AI, they'll kind of like test the market. They'll say bid, and then they lose a bid and they come down and then they buy it. So, I mean, that's basically what I do with these illiquid ones.
Nice.
I try to do that.
Interesting.
I don't know if you do the same thing. If you,
I don't know. I just buy. I'm just like, I keep it simple, although that's a good strategy. Maybe I should try that out.
Yeah, it's just ones where they have a large gap between the bid and ask. So if their ask is like 45 cents and the bid's like 20 cents, you're like, I have no idea where this is actually going to fill at. So I kind of go like 21 cents, 20 cents, 22. I just see where it gets filled.
Cool.
What, yeah, the macro environment is.
Tell me what you see out there. Like, well, how do you even read it?
I think we're going through a transition period, and I think that's why it's difficult. So we're going from a disinflationary environment to an inflationary environment, and money's rotating and sloshing around trying to figure out where to go. And I don't think that they're thoroughly convinced that the inflationary environment's here yet. I also think that there's going to be some people that still are holding on or clinging to the disinflationary environment, which was for the past 40 years. And I understand why. So I think we could have we'll call it a rip your face off rally at some point where it sucks all the bulls back in. That's going to be a bull trap, in my opinion. And then I think we're going to roll back over. And I think that's due to the imbalances in the commodity markets and energy specifically, that it's going to be an inflationary period, plus the credit side of things as well, currencies and credit and bond markets and all of the money that was created on that side, I think will be inflationary. And usually the way that you stop an inflationary kind of impulse or movement is from a supply response on the commodity side to get your GDP up. But if that's constrained on that side and they have to grow the money supply, I think it's going to be inflationary for a little while. That's my take.
So do you think we're entering a long-term inflationary period because of energy?
Yes. I think it'll be like the 70s, but much worse because it's global. And I don't think we've put the investment into it. And I think there's going to be energy constraints as the world tries to grow. So I think we'll live with much higher energy prices than what we had over the past 40 years. I also think there's going to be a lot more commodity constraints with a bunch of different minerals as well, like copper, nickel, cobalt. You can just fill in whatever you want on that side. And I think they're going to be constrained and they're underinvested. And even if you put the investment in it, there's still going to be lower ore grades, which is going to require more and more energy.
True.
So I think energy, it all kind of it starts and ends with energy, in my opinion.
Well, I'm biased too, so I'm of that thinking as well. But just to play devil's advocate here, what if we're actually entering a global recession that brings us, into some sort of equilibrium regarding our energy usage, or like what do you believe it would take? How deep or long would this recession have to be in order for us to get to any sort of equilibrium?
Well, yeah, I think the recession is a outcome or a symptom of an energy crisis, an energy crisis. So I think energy is the thing that's limiting it, and then we have to pull back and put everything back in balance.
Mhm.
So the way that I view it is that is the root cause.
Gotcha.
It's not that we inherently have weakness in the system. I think the weakness in the system is being driven by shortages of energy.
Got it. Okay.
That makes sense?
That makes sense. Yeah, no, it makes sense for sure. So what's exciting right now? Like, what do you like?
I like oil. I like natural gas. And I know natural gas, I like American natural gas. I should specify that specifically. And I think over time, things are going to get tight, very tight.
So is the situation with oil still pretty dire regarding supply?
Yeah. So we're going to see deficits out here at any second. And when they stop releasing the Strategic Petroleum Reserve, I think there's going to be some barrels that come offline in Russia with Western energy service companies pulling back out. And then I think demand's going to come back with China and some of these other countries around the world. And that's going to put us in a really tight situation. We'll be at pumping capacity. And then I don't think Saudi has any spare capacity left. And I don't know where those barrels are going to come from, when and where.
Okay, so
Yep.
Go ahead.
I think we're going to be stuck for a while, and we're going to be limited by that.
Okay. So something that I've been meaning to ask you for a little while now, since I don't invest in oil, but would like to learn more about it, is something that I don't think is talked about enough, is that where can we get information that's half decent regarding supply, regarding demand, any sort of reports like that? Sort of, like, I guess my question is, what's your dashboard when you're looking at oil? What are the sources that you have, the inputs that you have to make that decision?
Yeah, you can go to EIA and go to EIA and just look at their inventory reports. You can just type in EIA oil inventory, and you can see the inventories. You're going to do that right now, huh?
Yeah. This is so difficult to me because like E is I in my mother tongue. And so it's like, what? E,
energy, what is it? Energy, whatever agency.
Is it .org?
Yeah, let me, I'll pull one up here. Let's see if I can pull one up real quick. So you can.
Yeah, it's not org because that's the Environmental Investigation Agency.
I'll show you right here.
That's something completely opposite to
okay, so this is www.eia.gov. I just put EIA
okay.
inventory report.
Gotcha.
So weekly petroleum status report. And then you can see all the reports that they've got for petroleum and all sorts of different things. U.S. petroleum balance sheet, you can kind of look at that. You can see where everything's at. Crude oil, current week, weeks ago, year ago. You can see we're down 19% for crude oil. I know I'm not zoomed in on it, but you can also see other people put this in a graph format on Twitter, like Eric Nuttall. If you want to follow him, he's got a real good spot that you can follow, and he posts it every week. If you don't want to go and look at the EIA, he kind of does it for you. And then what you'll see is, this is what he does, is he charts it given the inventory deficit to the 4-year average. The 4-year average is
Wow.
this 0. And what's important is you can see from 2020, the decline that just goes straight lower. You know, it's we're eating through,
It's
and
massive.
keep in mind, this is what the Strategic Petroleum Reserve releases.
Mm-hmm.
So when that stops, I mean, it's looking pretty interesting.
And the strategic release,
Mhm.
strategic reserve, where do you find information on the releases? I'm assuming it's a government agency as well that will report that.
Yeah, they release it. I don't know you'd have to search. I just search on it through Google, and
Okay.
they'll put out. And they had like an original release of like 180 million barrels, and I can't remember. They're going to do another 15, or they're thinking about it.
What do
Here
you think of
recently.
that posture? Do you think it's the right timing for it?
You think that they're doing this on purpose?
Well, do you think it's the right thing to do with the information that you have? And like, what would be the alternative?
You mean for their releases? You think that's the right
Yeah,
thing that they're
yeah.
doing? No, it's completely the wrong thing to do. You want the price to go as high as you can, as quickly as possible, to bring on the barrels as quickly as you can. If you delay that, then investments gets delayed, a whole bunch of things get delayed, and it sends the wrong market signals. So I think it's creating a larger problem. I think it's going to spike even higher when all
I
this
guess it's better
comes
for you because
undone.
it makes the problem larger, which means that the price is probably going to go insane.
Yeah, so think of it like it's like you're going to have a problem coming up. You want to ease into the problem, right? What they're
Mhm.
doing is they're saying we're going to artificially hold it down with 1 million+ barrels per day. So now you're making the gap bigger when that comes back offline.
Gotcha.
So you're not easing into it. You're going to go straight into like I mean, this could be like a 3, 4, 5 million barrel gap. We've never had that before in the history of the markets. So we're
Really?
kind of like easing in, and then all of a sudden, there's a couple of things that are in alignment. We've got the sanctions against Russia that came in. They can hold production for a little while, but with those energy service companies pulling out, with all the technology and know-how to pull this out of the ground, I think they're going to decline here this winter. And if they stop releasing barrels here beginning of the winter, and then Chinese come off lockdowns, which you can see their demand roaring higher,
Mhm.
that's not a good setup for oil prices to stay low. That to me looks like it's ready to, I mean, move way up. Then
So is
the question is, where is demand going to get hit with 3, 4, 5 million barrels a day? Because I mean, the great financial crisis, 2008, killed like 3 million barrels. How do you get more than that? I mean, price is going to have to go way up.
yeah, like way up.
Now they can delay this, they can move it, they can release more from the Strategic Petroleum Reserves, they can do all sorts of stuff, and I'm sure they're going to do everything they can. But at some point, the reality is going to come.
That's so
it's
interesting.
it's going to hit.
Are you looking at mostly US space data? Or are you looking at some international numbers as well to see if there are any other sources that could, kind of poo-poo the thesis?
Yeah. So there's like, even on Twitter, they sometimes post world inventory data. That's been declining steadily, very much like our US data. So they're all in agreement from what I can tell. There's also Latin America that's really starting to kick back up higher for their demand. China's demand's kicking up, and India. It's all coming on, like they're all coming at the same time. And I don't know, the Strategic Petroleum Reserve release is just, it doesn't make sense to me.
Yeah, I
Especially
feel like
yeah.
it's kind of a sign of the times that our, I don't even like to call them leaders, but authorities, they have zero tolerance to pain. And so even the current cultural idea of allowing prices to be high, and letting one person suffer, however many million are going to suffer through this short term, is so difficult to bear that they end up doing things, which make it much worse for many, 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 many more millions of people. I think that way of thinking is actually the reason why we are going to have inflation for some time, because the governments will send checks out to everybody, as long as we're complaining. That's the truth. People complain, you get, like, if enough people complain, you're going to get a check. And it's something that's kind of new, to society as a whole, right? It used to be that it was kind of like tough luck, and things would, I guess, cycle through faster. But now it's absolutely unacceptable that anybody, cannot pay their bills in any sense. And so it's quite bizarre. And at the same time, like, we kind of need a high inflationary environment, in my opinion, because the world has a lot of debt, and we need inflation to at least give us the impression that some of that debt is being slowly killed off. It's funny because I was on Twitter about, I want to say a year and a half ago, and I was trying to ask, the inflationary people and the inflationary camp, like, okay, if you believe in inflation, like, are you getting into debt right now? Like, is that what you're doing? Is that the move? Because I remember, so I was born in Brazil, and at the time we had really high inflation whenever I was born, up until I was about, I think, 8 years of age. And that's when we pegged the currency to the dollar, only for, a little while. And then obviously, it went up with time, or it came down with time. And I distinctly remember my dad saying, as I was, playing with money, because it became a toy, that he had a bunch of student loans that basically pay themselves off with time, right? Because the government kept the interest rates low, and the actual inflation rate, it was even hard to calculate it, because by the time you were done with your calculation, the numbers were so much higher. And I mean, inflation sucks, but if you have a lot of debt, you kind of need inflation. And so, yeah, it was the right thing to do, I guess. I was lucky in the sense that I got my mortgage in 2020, but that was pure blind luck.
Yeah, I refinanced as well during that
Nice.
time frame to lock in my costs. And that was one of the parts I thought an inflationary period was coming. So you want to look to see how you can lock in your costs at a low level and let the inflation eat it away. I completely agree with
Good
that.
move. Well done. Well done.
Yeah. So what else? What else are you seeing out there in the markets? What are your favorite sectors right now?
You know what? I'm starting to like gold again.
Yeah.
Gold is kind of the left for dead. You pick any gold company that's in the, late stage exploration or development stage, and the market caps versus what they actually have NPV wise on their projects, there is no relationship. It's just random numbers. And that's exactly what I saw at the end of 2015. And if people were around in 2016, that's, we had a micro bull market. It only lasted like 6 months, but it was amazing, and everything went up multiple times. And at the end of 2015, which I think might actually happen again with the tax loss selling season that we're approaching here, is that companies were trading close to cash, some of them, and you could have thrown a dart at any sort of company with gold in the name, and it went up 3 to 5 times within 6 months. And I'm looking at charts of gold companies, and I love it. I just looked at one, I think 2 weeks ago. They have an interesting project in Africa. Their NPV, I think, is 700. Yeah, I think it's around 700 million NPV, and their market cap was, let me see if I can bring it up, if I can remember it here. I think it was less than 100 or something like that. And like that's what I like. I like numbers that don't make any sense. And that's a problem that I have with some uranium developers right now. So when I bought Encore Energy, it was left for dead. Nobody cared about it. They had a lot of pounds in the ground and it was going for less than 50 million. And now let's see what the valuation of our Encore Energy is. It's 384 million. But I don't think their NPVs are much higher than that because they have small projects. The thing with Encore is they're going from developer to producer, and then people get really excited about that. And so you ask yourself, okay, so Encore is, and by the way, I love Encore and it's still some, but I don't have the faith that I had obviously when I started buying it, because when I look at a 384 million market cap, and I say, okay, but they're going to become a producer, they will be re-rated. What's another company in the US that is also a producer, but also has, a lot of maybe smaller projects, not super high grade. And you look at Your Energy, and Your Energy is 367 million market cap. They're a producer. So where's the re-rating of Encore going to come from? I don't doubt that there is going to be a lot of M&A coming from those guys because, they're pro, they know what they're doing. But at the same time, I'm looking across the board in uranium, and the late stage development companies are going to need much higher prices for their NPVs to grow accordingly, for them to be considered cheap again. Because to me right now, I like the brownfield historical stuff that nobody cares about, sub $10 million market cap. And yeah, I don't even remember what your question was, but yes, I like gold because if you have gold in the ground, with any sort of resource / PEA / feasibility study of any sort, you'll see them just insane discrepancies, between that and actual market caps. People do not care about gold whatsoever right now. That's attractive to me.
Do you have any concerns about kind of the ore grades declining very low in some of these companies that have basically gold dust in the ground? Is there any concerns there?
Yes and no, because a lot of mining is not just grades. So it's grades. Yes, it's jurisdiction. Yes, it's the depth. Yes, it's there are many things, right? Sometimes, believe it or not, the stuff that kills a project, I mean, you know this as well as I do, is not even the actual project. It's that the people in the area don't want that product to become a mine. Like they don't want to mine. That's it. And so you have projects like Pebble up in Alaska that would have been, I think, number 2 or 3 largest gold deposits in the world. And I think number 7 largest copper deposits in the world. And then I think they have a massive moly deposit as well. It's a massive bonanza, like everything that you can think of, massive deposit. It's not being mined, and I don't know when, if ever, it will be mined because the people in the area don't want it to be a mine. So sometimes it's the stuff that the companies don't put on the presentation that you should really be asking. And I think that grades is just a natural course of Mother Nature in the way that the resources are spread. The grades are going to become lower. And I think by the time our kids and grandkids are investing in these, weird companies, they're going to be talking about, the grades that we see as high grades. I think that's just the natural way of things. Sometimes people can get really fooled by high grade. I mean, I've seen companies that, they had high grade, but it was in a city, like in a town. Like the drill went into like the town. So it's not going to be mined ever. Like, what is the point? So yeah, grade. Yes, look at grade. That's, however, just one part of the story. And sometimes it's good. One thing that I have noticed is that sometimes I look at a company with my still very limited technical knowledge, and I don't understand why it's so cheap. And then it's good to just, befriend different people on Twitter that kind of know what they're talking about. They're, miners themselves. Sometimes there are other CEOs of other companies. One of the best things I did was go to a show and ask, CEOs of companies, so who is in your area, but they're doing a really good job? That's a good sign, right? If everybody's pointing to one company, then it's kind of been half-vetted by their competition. So ask around and ask, what's wrong with this company? There's a company that I was scratching my head for several months, never bought it. And somebody knew that something was wrong with this company. And I think they're coming out. I think they just came out with news that they're in trouble, that they're in financial trouble. So I don't want to name names, but yeah, they had news coming out consistently that was really positive, and their share price was just selling off, selling off, selling off, selling off. When something like that happens and it's not the whole market, it's just that one company, usually there's a story that nobody's talking about, and it's good to ask around. And you'll for people who have never tried this, try it. Go and talk to CEOs of other companies. Go and ask people on Twitter. Mining folks are the easiest people to have access to. You can talk to Rick Rule. I've interviewed Rick Rule. You name it, there's nobody that's okay. There's maybe a couple of guys who are not accessible, but most guys are super accessible, and they're willing to take your call, or they're willing to, read your email or chat to you on Twitter and, tell it like it is. So absolutely ask people, because there is always something about that company that you don't know about. And nobody will talk about it publicly with their name slapped on it, because they don't want to carry the risk.
Yeah, I think that's usually what I do. Is I just kind of bypass all the small caps, and I just go straight to producers. And then it's a leverage play to the price move of the commodity. And it's a lot less risk than having to dig into all the little guys where the success rate is really low. But I guess if you know what you're doing, if you've talked to them and you find some information, maybe talk to some insiders, figure some stuff out. I mean, maybe it's a lot more successful doing that.
Yeah, I like people who already know they have stuff in the ground, but they just don't know how much yet, and nobody cares because the market doesn't care. So that's my sweet spot.
That sounds like uranium right now in some of the companies.
It's just like uranium.
It does. It does. And some of them. Yep. Yeah. So what else? Do you have? You have anything else you'd like to discuss?
No, I think that's very much it. The only things that are really, really rocking my portfolio right now have nothing to do with mining. They're private investments that, they were literally thrown at me. And I liked the management team. I knew that they were killers, and I said yes. And now they're doing really well. One is an artificial intelligence play. It's a tool for developers. It's a private company that's in the UK. It's doing quite well as well. It's kind of it's a way for developers to be able to tell, whether they're performing well, mentally and also output wise. So that's doing quite well. And there's a company of a buddy of mine out in Brazil. They have a SaaS product that actually watches and measures machines and operators. So if you have a steel company, they have pretty much all the steel makers in Brazil are clients of theirs, and you have a bunch of machines and people operating the machines. You got to know where your machines are, what they're doing, if you're just wasting gas, if they are where they're supposed to be, and you need to measure their productivity. That's what they do. And I mean, I didn't go and look for that. They came to me. They needed money quickly. I'm like, sure, here, have some. I like you guys, and I like what you're doing. I know you're good. And so those random things are doing really well for my portfolio. But you bet that, whenever I liquidate those positions, and I'm sure that some of it's going to flow back into good old mining companies. Once you get your first 10 bagger, it's hard to not come back to this crappy market.
So that's what draws you to the commodity market, is making a decade return in like months.
Yeah, it's the fact that it always repeats, right? I've been blessed with very few skills when it comes to investing. I have no interest in going deep into almost anything. But when it comes to mining, if you come in and nobody else likes mining of that particular commodity at that time, and you're willing to kind of set it and forget it, I mean, obviously there needs to be substance to the company you're buying. They need to have a resource, or they need to be producing, etc. It's so difficult to not make money if you're willing to wait long enough. And I'm willing to wait long enough. So I like to buy when things look like absolute crap, and I'm willing to wait. And you can repeat that. Like you can do that, sometimes to different commodities, one after the other. Like that happened to gold, and now that's now happening to uranium. And I don't know what's next, but I think that maybe gold and silver are due another one. And then there's long-term copper, and the amount of copper that we're going to need to make the world a cleaner place is absolutely mind-blowing. I think copper grades are definitely coming down quickly. Chile is becoming an increasingly difficult place to do business in, and they're the world's largest producers. And so, yeah, it's looking good. I just like things that I know will happen, things that can happen. It's easy to sell too early, but things that will happen, I am willing to wait. If it takes, a year, 2 years, 3 years, 5 years, I hope to still be around. I'm still young, so. That's what I try.
Yeah, I take the same approach. I find something that's really cheap, find something that's out of favor, buy it, and then I use time to hedge myself. And that's literally it. I just hedge it with time.
That's it. That's how I hedge, with time.
Yep. Yeah, same thing. I do the same exact thing, same approach. So, how do people find you? Like, what if someone wants to contact you or something? How do they find you?
Sure. So people can follow me on Twitter. It's the next big rush is my handle. They can also follow me on YouTube. I've just started posting videos again. Finally. It's also the next big rush, and people can come and message me privately on Twitter, and I'll read their messages and reply if I have anything to add, unless it's an inappropriate message. In that case, don't bother.
Okay. Yeah, I think that's all I've got. So that's, thanks for coming on.
Thanks for the info on oil. I have a little bit more to mess with now and go and investigate further.
If you want to play oil, I think a good way to play it right now is energy service companies.
Energy service companies.
Cheap. Yep.
Okay.
Yep. All right. Well, that's all I've got. So I appreciate it for coming on, Fabi. We'll
thanks, Andy.
Hopefully see you again.
Yeah. Chat soon.
Yep.
Bye.
See you.